All right. Good morning, guys. Today is Wednesday, August 16th. As usual, be going over analysis for US 30, gold, and EU. For some reason, my charts are still freezing. Let's see. Need to restart something. All right, let me try and fix this window real quick. Hmm. Be my whole computer. Just a few more moments. All right, I think I got my browsers to work well now. Let me just share the screen again. Okay, so hopefully now you guys should be able to see my screen. So going over this, what we currently have right now, looking at the daily bias, so everything, right? So US 30 for me, my daily bias for US 30 is bearish. Let's see if I move this. Here, so it's bearish because the last closure below a daily SAR, this was bearish. Gold, I'm still bearish for it. EU, I'm still bearish. And you can see for the DXY, which is the dollar index, it is bullish. Now, given that, the only trade that's running here is this EU trade from yesterday. So if you look at this EU trade from yesterday, and this trade should be at break even, because when you've achieved, because this trade had a 30 pip stop and 60 pip TP. So this trade yesterday, it came down about 27 pips at the low of that candle. Went back up to around break even. But for me, I normally set break even when it has a 1:1. So depending on where you entered, I had two entries. So one of them came back and took me out. This one is still running because right now is when I actually just set break even because it achieved 30 pips at the low of the previous candle right there. So this trade right here, if you're still in it from yesterday, this should be at break even. So given that I'm still bearish on all these three instruments, gold, unfortunately, I don't see any entry on gold, whether it's on the 4-hour or whether it's on the 1-hour. So keep in mind, I'm only looking for entries from those SAR regions. So this US 30 trade from yesterday, personally, I didn't get tapped in, right? Because I was waiting for it here. Because if you guys remember, this was the live session yesterday. So if I replay this chart, this was the 4-hour candle that was during that live session. And I did mention that if, so if I go to the next candle, I did mention that if this 4-hour candle closed below this zone, I would be looking for price, best case scenario, I wanted this 4-hour candle to close around here so that, right, I enter that trade and my stop loss is easily above that zone. And then I did mention if this 4-hour candle closed somewhere below here, I wouldn't enter on impulse, but I would wait for the retracement for price to come back to this zone, and then I would drop to the 5-minute or 15-minute and look for a 5 or 15-minute SAR. And you can see the 4-hour closed all the way here. So you can see if you entered on impulse and using like a 30 pip stop, you could have gotten stopped. I think this was 50, yeah. So 50 pip stop, you could have gotten stopped out. And you can see what the next candles did. So the next candles, so this one literally gotten faked out and the trade going straight down. And you can see then it came back. So this is the only time US 30 is coming back to retest, and this is a 4-hour zone. So this is a very huge zone. So since I'm still bearish on US 30, I'm expecting this to be a Judas swing. And I talked about it yesterday that this is the zone. So I was talking about the Judas swing when this 4-hour candle was all the way up here. So this is the zone you should be looking for sales on US 30. So given that, I'll come back down and see what I have on the hourly time frame. I want to see what I have on the hourly time frame. On the hourly time frame, I only have one sell SAR zone right here, unless I want to wait for US 30 to come to about 35,200 on the hourly time frame. So I don't think it's gonna get up there just yet. Again, I'm still bearish on it, so I would rather go to the 5-minute time frame and wait for a sell SAR to show up. So for US 30, I am looking for a 5-minute sell SAR to show up, and then I'll wait for 2 candles to close below it. So better yet on the 15-minute, but if we don't have anything on the 5-minute, I'm pretty sure we don't have anything on the 15-minute. And given this pump up for US 30, I've seen this a bunch of times where during market open, they give that huge push. And then later on during the day, I can almost, with enough probability, I can imagine we'll have a huge drop tonight on US 30, probably this much. So this is a 400 pip drop, because I've seen this moves in the past where before they give the nice move back down or back up, they make a fake out. So think of this as the Judas swing or the manipulation phase. And then from there on, they pick up a lot of liquidity and push the market so heavily down. So personally, I'll wait for, if you want to enter early on the 1-minute, again, I don't trade 1-minute entries, but for people who like scalping right here, this is an entry for scalpers. And you can see this one gives you a 2 pip, is it 2 pip or 20 pip stop? Gives you a 20 pip stop. But for me, I'll wait for it on the 5-minute. So if you're a scalper, this is an entry for you right here. Stop level. So ideally this would be 500. So 50 pips TP, 100 pips, 50 pips stop loss, 100 pips TP. If you want a tight stop loss on the 1-minute, you can get away with having a 20 pip stop. Again, I don't recommend 20 pip stops, especially on US 30. But this is a trade for scalpers. But for me, I will wait for the trade on the 5-minute, because you can see how erratic the 1-minute is. So I'm waiting for the same thing that's happening here, but on the 5-minute right here. And then I'll go ahead and sell US 30. So hopefully we get that during the live session. Gold, same thing, right? This is the 1-minute entry, but to be safe, since I'm still looking for sells on gold, right there. So I'm looking for the same thing I just showed you guys on the 1-minute. I'm looking for the same thing on the 5-minute. So that will give you that nice confluence. EU, I'm not looking for anything on EU. EU is still running. So it's coming back. Let's see, this is the 1 hour. Let's see if there's anything on EU. So even on the 5 minute, I don't see anything on EU as well. Yeah, but that's how if I don't get those entries, guess what? I'll just wait for the next. So whether the next trade comes tomorrow or Friday, I'll just wait for the next trade. Because keep in mind, if this EU trade hits TP, this is 1% gain. Like if you don't get taken out at break even, this is literally 1% gain. So you just need literally 8 of such trades to just make it to phase 1. And EU definitely moved slower than gold and US 30 because we caught a lot of sells or a good amount of sells on gold and US 30 the last few days. But EU is the only trade that's been playing around. So for me, if I don't get any of these trades, I am not trading until I get them. So whether it's right now, whether it's 3 hours from now, I'm not going to FOMO into any trade that doesn't meet any requirements. The other thing, I'm just talking to my programmer and we're trying to get the, because I know there are folks who like extending this SAR regions, like even on the 5 and 15 minutes. So personally, I do not extend them on the 15 minute and 5 minute. I only extend them on the 4 hour and 1 hour. But I know folks like Desire, right? I know you talked, and here's if you're extending, this is an entry for US 30. Because this would ideally be 2 closures below, and we have another double SAR. But I know there are people who like extending on the 5 minute and 15 minute. But the issue when you extend, you get both green and red. I'm sorry, red and green SR zones. So I'm just talking to my programmer, and we'll put an option in here so that you can pick. So like for example, personally, I'm only looking for sales on US 30. So I should have the ability to hide the green lines, the green zones, so that I'm only left with the red zones. So this right here, for those of you who like extending on the 5 and 15 minute, I might enter I'll enter a small filler sell on US 30 here. Because this is, I'm entering based off of, it broke these 2 double SARs, and then the next candle broke and closed, the next candle also closed below. So this is, I'll enter a filler sell on US 30 here. Let me see how big that TP stop loss is. 70 pips. To be, I don't want such a wide stop loss. Again, I want to improve my risk to reward. So give me 1 second. Let me enter that trade. So a filler sell is like 0.25% risk. So 0.25. Let me go ahead and enter that. See, I want to have like a tight stop loss for this trade. The best CP, if you can do 50% of this candle. So I'll do a 25 pip stop, but keep in mind, filler trades, right? You don't need a tight stop loss, right? And the trade is heavy in profit. So I don't know if anybody jumped in. Didn't get a chance to. So if it comes back up, I'll jump in.
I had to close already with a 50 pip stop to the top of that candle up there. I wanted to enter before the stop loss got too big.
Yeah. So even if this current candle, you can see we have another double SAR. So keep in mind the double SAR that this trade is based off of is this one right here. This one right here. So if this trade retraces, I'll enter the trade again. So hopefully we get that retracement. So the double SAR that this trade is based off of is this one, but you can see we have another double sell. Actually, this is triple sell SAR. So if this trade closes as well, you'll have 2 candle closures below, and this will be an entry as well. So I'm hoping either way, I'll enter. Now this second trade, I'll enter with a regular lot size, but let me start planning out how I want to do that. Stop level 3,600. All right, I wanted to come back up. So that's 2.5 minutes. Yeah, so for this trade, you should get, so long as it doesn't keep going down, you should get away with a 30 pip stop. So I want that trade to actually come back up. So whichever comes first. If this trade, current candle, comes back up, I'll re-enter just the filler trade. If this candle closes below and doesn't come back up, I'll enter with a 0.5% risk. I might have to do like a 50 pip stop for that trade. So yeah, but this is what I was mentioning. So personally on the 5-minute, I do not extend the lines and I just use the most recent SAR. So I'll show you guys. So like in this instance, and the reason I didn't want to extend is because the lower, not that it's not accurate, it's just because the lower you go, the more lines you get. So I didn't really want my charts messed up. But you can see like if I was just trading the current SAR, there's no current red SAR. But the beauty about extending is that you get those double zones. But for me, I just didn't want to have both red and green lines. So this should be a 0.25% risk. I think you're at a 1:1 right now. So you can either set, so if you win this trade, so remember filler trade, if you win this trade, you're up 0.5% for the day already. So this is the beauty with those 1:2 trades. So you should be at break even. So I'll 57 was this 50 pips. It is at a 1:1, right? Unless I'm tripping. Yeah, you should be at a 1:1. So go ahead and set break even. Now, if you did enter with a larger lot size than a filler trade, definitely set break even. So whatever happens, this trade for you should be at a break even. Filler trades, you can afford to not put a stop loss, especially if you're sure the trade is going to go in your direction. But just for metrics purposes, if this trade hits, I did say filler trade, and filler trades we take with a 0.25% risk. So if this trade hits, it's just like a 1% gain. Again, remember, this is now another entry right now. So let me see. Give me 1 second. I want that to retrace a little bit more and more. I want this to use a 50 pip stop for this. See, it's going to, all right. What are these things off? Okay. All right, so I entered that trade. So this is just a regular trade. So 0.5% risk with a 1:2 risk to reward. So if this trade hits up 1%, so I'm in that trade right now, 50 pip stop loss. And what is it? 50 pips stop loss, 100 pips take profit. So my stop is above those double SARs. For a safer entry, stop above the previous high, which would be the previous high of this candle. Now, if you were in the filler trade, you're getting taken out at break even right now. For the new trade, it's like 40% in drawdown, so we'll see how that goes. But I would expect US30 to shift back to the downside from here if it's to continue that daily bias. Let's see what else we have. Gold. I have nothing to trade for gold. Let me see something also here for the 15-minute. Okay, so 15-minute as well. This might be another 15-minute entry. If you're trading the 15-minute time frame, there's these two extended lines here, right? So this two 113, I really don't consider them double SARs. They are pretty much away from each other. Actually, this on the 15-minute time frame, this would be test and rejection. So you can see if you look at this here, this right here, this green candle tested this zone, right? So I'll go ahead and box this in. Tested this zone. The next 15-minute candle tried to break above, but rejected and closed below. So actually, this is also a 15-minute entry by just using the test and rejection strategy right there, or test and rejection entry for SAR. And this one, you would need like a 60 pip or 70 pip stop for your stop loss to be above that SAR. So this one as well. So for this one, you'd need like a 140 pip TP and like 70 pip stop loss. So that's a 15-minute entry right there. And also there's the 5-minute entry that's currently running. So just pick whichever one you want to trade. I don't recommend trading both. If you do trade both, I wouldn't recommend taking both with like 0.5% risk. I would say split that 0.5% risk between the two, instead of going heavy on it. Because again, we want to keep in mind manipulation, right? Manipulation in the market. Anyway, that's for US 30. Gold, I don't see, personally, on the 1 hour and 4 hour, I don't have anything for gold. On the 15-minute and 5-minute, let's see. So this is what I meant by extending, right? Actually, let me turn off the markups because that's also, but you can see even if I turn off the markups, this is why I don't like extending on lower timeframes. So maybe on the 15-minute might be a little cleaner. Yeah, but you can't really see anything. So even on the 15-minute for gold, I do not see anything much. Let me put this back to where it was. EU, I'm not looking for anything on EU, ideally because this is the trade that we were currently in. Should be hitting break even or might hit break even. If it doesn't hold this, sell SAR. But for right now, I'll just hold off and catch, just keep riding this US 30 trade that we are in right now. So this is the trade on the hourly. I think we got in somewhere here, but let me go back to where we actually got in. So the one we got in is right there. I'll turn off this extensions for now, so as just to make the chart a little bit cleaner. Okay. So those, there's the break-even one, I'll go ahead and take it off. I think it's somewhere behind here, unless it's still, no. Yeah. So the filler trade would have hit break-even unless you're still riding it without TP. I'm sorry, without stop loss. So currently there's the small one right here is the 5-minute entry. The larger one up there is the 15-minute entry. So the one above here, the one with the stop loss above here is the 15-minute entry. All right, so it's coming up. I'm still in the trade. I'm like 10 pips away from stop loss. So depending on when you entered this, if you entered when I said I entered, you should still be in the trade. So my trade missed stop loss by like 2 pips or something. So I'm still in this 5-minute trade as well. So keep in mind, the reason we're looking for sells is based off of the daily bias right here. So that's the major reason we're looking for sells. And US 30 again is coming back down still. So I'm still in that trade. So I'm still in the 5-minute trade, the 5-minute entry. So my entry, right, if you remember when I was entering, I didn't enter on impulse, right? So I waited for that retracement. So I'm still in this trade. And I'm not in the 15-minute trade. Let me know if you guys have any questions.
Yeah, I have a quick question.
Mhm.
So as you were explaining, I noticed something is that when there is a break of a SAR,
Mhm.
sometimes you enter without the retest. Like if there is another candle which closed above or below the SR,
Mhm.
you just enter on the trade. Is that
Uh,
correct?
Do you mean like personally or?
Yeah. Personally, like for example, like yeah, you were mentioning it on like 15 on 5 minutes US30. You said that if this candle closed,
Uh-huh.
if there are like two candles that closed below
Yeah.
or above the SR.
Yeah, correct. So I stopped using the word retest because that led to some confusion because not the second candle will not always retest, right? In the perfect world. Sometimes it will retest and that will be a nice entry, but not every time do you get that retest. So I normally mention two candle closures, and then that's when you do the math, is like, okay, when the second candle closes, like in this four hour trade right here, like when this 4 hour candle closed yesterday, the question to myself was, if I turn this onto the 4 hour, the question to myself was, now this was a break and this one did retest. But let's assume this 4 hour candle did not retest and then started bearish and closed down here, right? The question to me will always be, how far is my entry from the SARs that I'm trading? Okay, so at the very least, you should have a 30 pip stop loss. So for you to enter, if you would have entered this trade on impulse, let's assume it didn't give us the retest and it was just like two candles closing below, you can see your 30 pip stop would have been below your SAR. So technically you're breaking your rules. So it's either you do one of two things. You either extend your stop loss to be so far up from your point of entry on impulse, and you can see for that one, you'd have needed 100 pip stop. And for you to achieve a 1:2, you'd have done a what? 200 pip TP. So for me personally, this is gonna mess with my 1:2 risk to reward. So since I still want to keep it at 300 at the very least, and then do like a 60 pip, I'm sorry, 30 pip stop loss and do like a 60 pip TP, my best case would be to hope that price comes back up to the SARs that I'm selling, that I sold at, and US30 is dropping. So I don't know if you guys didn't get stopped out like me, you should be up in profit. So the second scenario is for you to, instead of getting in on impulse, wait for the trade to come back to the zone you're getting in off of. So the SAR that you're trading. And in this instance, that's what I'd be calling a Judas swing. Because if I expect US30 to keep dropping down, I expect it more times than not, it will. So if you expect a candle to be bearish, you normally expect some manipulation, which is a candle starting off to be bullish. So which is why I would have wanted US30 to come back up here. And during the period that it's in here, I go down to a lower time frame. For me, I prefer either the 5 or the 15 minute. You can definitely use the 1 minute, but just be on the lookout that you can easily get stopped out of the 1 minute. So for me personally, I just wait for that retracement and I enter there. So just keep in mind, not every candle will give you that retest that we talk about. So this is why nowadays I just talk of two candles closing either above or below. And there goes the US30 trade. So whether you're on the 15-minute trade, so always remember, right, higher time frame trades will be better for you as opposed to, so the lower the time frame you go, the higher the probability of getting stopped out is, which is why actually even today, right? Actually today I wasn't going to take any trades because I didn't have any trades. Actually, no, the US30 trade, I would have still taken it because we are getting this. But if US30 hadn't pumped up this way, I wasn't going to take anything on gold because you can see on the hourly, I don't have any double SARs on the hourly. On the 4 hour, I don't have any double SARs on the 4 hours. So like gold, there's no, unless I'm just trying to force something, because for me nowadays, I just stick to the 4 hour and 1 hour, identify those zones. And then when price comes to me, in those zones, I just enter my trade there. Yeah, so now just keep in mind, not every candle. So forget about retest. For now, just focus on two candles closing above or below. So if the second candle gives you the retest, that is perfect. But if it doesn't, wait for price to come back and pick you and tap you into your trade. So US 30 here on the 5-minute again, right? Keep in mind, like on the 5-minute, without me extending the lines, what I would want to see on the 5-minute time frame, I need to see a red sell SAR zone created right here. So I would need to see a red SAR sell zone on the 5-minute. So right now, like for this current trade that's running, no, this is the 15 minutes. So for this current trade that's running, because personally, I think it's stopped out. My stop, because I still have a 50 pip stop. Did I? Oh, I know I didn't get stopped out. I entered at 35,048. My stop loss is 35,097. No, that's still a 30 pip stop. Okay. Yeah, I think I just entered late. So my stop loss is right here. So that's how close I got to being stopped out. So my stop loss is right here on the 5-minute trade. So that's where I entered. So I just survived this trade by a whisker. But anyway, yeah, for the 5-minute, this is exactly what I'm looking for right here. Because again, remember, for me personally, on the 5-minute and 15-minute, I do not like drawing. I do not like extending my lines. And again, that's a personal preference, right? Because I just find myself over trading if I'm looking for trades on the 5 and 15-minute. So this is why I like, even with this SAR, I just identify my zones on the 4-hour and 1 hour, and then I just wait for price to come there. But knowing myself, like if I'm extending on the 5 and 15-minute, I'll try to catch every closure below or above. So that's the reason that I don't extend personally on the 5 and 15. But yeah, this is the trade on the 5-minute that I'm in. And both of them are valid trades, right? Because on the 5-minute, if you're extending, you have those two SARs at the top, and then you have two SARs right here at the bottom. I like the 15-minute trade better because your stop loss would ideally be above the high, above the previous high. So this is the trade that I like better. And this is based off of test and rejection on the 15-minute time frame. So I like the 15-minute trade better than the 5-minute. So let's see if during this time it's going to decide to stop me up. But you can see we have a lot of selling pressure on US 30. Like all of these wicks that are being created, that's a lot of selling pressure that's being created for US 30. So this is what I like to see right there. And I know on the hourly as well, we are testing this trend line to the downside. But again, right, so if I'm looking on the hourly, yes, it's telling me that this is the second candle that's closing above a green SAR on the hourly. But for me nowadays, I just decided to follow the daily bias. It's been working well for me. But for, right, if you're taking buys or for anybody looking for buys on US 30, right, you can see here, this is a closure above a green SAR, and the current 1-hour candle is retesting. And if it closes above, sure, yes, if you're looking for buys, that's good. But for me, nowadays, I just stick to the daily time frame for bias, and then I look for entries on the 4-hour and 1 hour. And it gives me lesser trades, but those trades are highly probable on those time frames. So that's why for me, it's just easier to stick with the daily bias.
Man, why do EU tap in so much? My goodness, man.
You say EU has been playing games this whole week,
Dancing
man.
too much, man. Dancing, 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 up, down.
Yeah, this has been. But you can see, right? Like if you're looking at it, this is what you want to see, right? This, if you're looking for sales, this is what you want to see. This rejections, and from this zones up there. Like for example, that and this whole sell zone that's there. But again, right, the other thing to look out for is this DXY. So long as the DXY remains above this bullish zone, all of these instruments, US 30, gold, and EU should ideally keep dropping. Now, personally, right, for gold, I'm waiting for that green SAR. So the only time I'd be looking to buy gold is if we get that green SAR. And if we do get that green SAR, like for example here, right, this one right here. Let me give you like an example of what I would want to see. Let's think of this one, right? So if US, or even this one right here. So if US 30, I'm sorry, this is gold. If gold forms this green SAR, currently where it is, and we get a daily candle closure above it, honestly, I'll just be looking for gold for buy entries. And keep in mind, when this daily forms, like for example, in this instance, and I went over this yesterday, when a daily candle closes above or below, depending on the direction you are trading, do not enter on impulse, right? Don't enter on impulse. Go down to the 4 hour, go down to the 1 hour, identify double SCRs, because in this push to the upside, guess what gold is creating? It's creating buy liquidity zones. So down here, down here, down here, it's creating buy liquidity zones. So for them to keep pushing gold up, they need to come back up and pick up orders or pick up liquidity from those zones. So which is why I say use the daily for bias and then use the 4 hour and 1 hour entries for 4 hour and 1 hour time frames for your entries. So we need this thing to push down. We just need one nice candle to push this thing down. But you guys can see this trade, especially the 5 minute, the one we entered. So if you entered this the same time I did, right, you just survived getting picked out by just a few. But you can see there's heavy selling pressure on US 30. You know, they're holding down US 30. So this trade, which is why I like the 15-minute one better, the 5 minute has a high probability of getting picked out, but the 15-minute, if they do push US 30 above here and close above this high, US 30 can push up in the short term. So they need to keep US 30 down in this zones, more the 15-minute time frame than the 5 minute. But I'm just hoping we get a nice, like it, especially if we get a nice 5 minute candle closure below this level right here, below this higher high, that should give us some liquidity to pump price to the downside. And there it goes. And so I did, this morning I did mention as well, for those of you guys who use trading robots, and I know some of you guys we met like in a EA channel, right? You can use this daily bias to trade with a bot, right? So if the daily is below a sell SAR, just turn on your EA for sells only. So you can see here, if you turned on your bot for sells only for gold, you would have been banking, and some of these robots, whether it's I have used or you guys have used also, they work, they give you a lot of profit if like they go up in drawdown, right? Not too much drawdown, but enough drawdown. So for example, here, when you had this daily closure below here, could have turned on for sales only, and you could have been banking this whole time. Now the key is know the parameters you need to set such that as much as you could have done sales only here, this move to the upside here for 1944 to 1970, that's a 25 pip, 250 pip range. You can survive that retracement, and then you can bank again. You keep banking on the way down. So same thing here. When gold closed above this buy SAR, you just turn on buys only, and then you bank all the way there. Same thing here, gold close on the daily, sells only, sells this whole time. Right here, didn't close above the buys, so you need to have been taking the buys. But guess what? The last time it closed below a zone was a sell zone, sell only this whole time. So you'd have been banking with sales from May 23rd all the way to July 23rd. So for 2 months, you'd have just been selling and selling and selling, because the next time that gold closed on the daily above the opposite SAR was 2 months away. So the only time during this year that strategy, if you're playing with a bot, that could have maybe got you in drawdown or hit maybe your daily limit is this zone right here. When gold closed above this zone, technically right here, you should have been doing buys only until you got the next sell. So right here, you could have experienced some drawdown. The only other time you could have experienced drawdown was here, this one. And this was February 2nd, and the beginning of January or the beginning of this year, you could have just been taking buys only because the last one, so keep in mind the last one here was a green zone. So buys only, you keep taking your buys only here, but you get burnt because this time gold reversed back down heavy. So during this time, you start taking sells on 3rd February. You ride the sells through to the next time you get a buy, which is March. So for like a whole month, you're riding sells only. When you get the buy from March 3rd, all the way to May, all the way to May 23rd, buys only. So yeah, so for you guys who use bots, you can use that. I'll try and create a simple EA for you guys and just give it to you guys, and we can create an EA channel because I know some of you maybe don't have time to trade.
I'll definitely be interested because I can never get the PYC to either do all buys or all sells for some reason for me.
Yeah, I'll create a basic one and just give it to you guys for free. It shouldn't be too hard. And then we'll just create like a whatever channel, like a EA channel here, and then I can just be telling you guys set sells only on gold today, set buys only. But the key, so keep in mind, right? You can see it's looking back, right? It makes sense. It makes sense to do that. But the only thing will be you need to know how much of drawdown you can survive. So that will be the main key right there. Just know how much, because you don't want to go heavy lots. Like here, yes, sells only as soon as this daily close below this sell SAR right here was good, but would you survive at 250 pip move up? So for example, here, if you're just selling 5 lots, you're not going to survive that. So this would be more of a slow and steady thing. So same thing as US 30, right? If I had a bot right now, I'd just be taking it sells on US 30 this whole time since US 30 gave this sell right here. Sells only this whole time. This time it closed above here, buys only this whole time. Buys only this whole time, but keep in mind again, you need to survive such a retracement. And this one on US 30, 34, 429, it's a 300 pip drop, so not too bad. I've seen worse, but yeah.
I mean,
so
I would look at this as passive, a way to make
correct.
passive, so I would set the settings very like conservative.
Yep, yeah. So yeah, I'll create. It shouldn't be hard, right? Because it's not like a major EA. We don't need too many inputs or whatever. We just need the, what is it called, step size, starting lot, whatever it's called, the other one to increase. Yeah, I'll try and create that because it's just gonna be a simple EA. And we can create an EA channel in here. So this US 30 trade.
Are you gonna consider doing the SAR one too, or are you just gonna do basically the settings to turn off the buys or sells?
I think it's just gonna be buys and sells like this SAR, even with the indicator. So for example, here, this is an indicator that I'm working on, or I've been working on with my programmer for the SAR entries. But the issue, like this, getting these lines to show up is very tricky. It's we've been working on this for 2 weeks, but it gives entries, but it's not the entries that I would want it to give. So I can develop like an EA based off of this. I will try to base it off of that, but the issue is these lines are independent. They are tied to the SAR. So, and just getting the logic to work for the lines only is near impossible. So that's the issue. I don't know if I cut off because I think my internet cut off. But anyway, the issue with this is, yeah, the SAR, because the SAR and these lines you guys are seeing here, the logic is dependent on each other. but most of the logic is based off of the SAR. So it's hard to just base entries based off of the horizontal lines you guys are seeing. So this might be something, right? We might just be talking in that channel and saying, okay, just set gold to sales only. The best thing with it is because we're using, personally, I would rather use it on the daily time frame. So knowing that, like, look at how many days. So you'd have only just set sales only on July 23rd. And this whole time, for like a month later, you wouldn't have touched anything with your EM. Maybe you set scheduling times. Maybe you don't want it to trade between mid New York to mid Asia. But I think for this one, it will just be up to you to just go ahead and set buys or sales only. Unless now you start saying, okay, for my buys and sales only, I'm only going to be doing it on the 4-hour time frame. If you do that, you can see the lower the time frame you go, the higher the amount of times you will need to change your buys and sells only, if that makes sense. But for me, I'd rather just use the daily and just consider it passive income. US 30 is dropping, so there we go. So it took a while, but we are dropping here. So the filler trade got stopped out of break even. If you entered the second trade with me, when I entered, you should be at 1:1 anytime from now. So let's see how far down it is. The 15-minute definitely was better, but yeah, so you should be at a 1:1 because it already reached like 30 pips. So if you're in this trade, at the very least, secure some or set break even. Depending on where you guys entered from, I know some either entered lower or entered higher, but if you're still in this trade, start thinking about securing some. So let's see. So this already hit, I don't want to go against what I teach you guys. So this should be at
Question, where did you say if it closes below?
this one right here. So you see this high?
Oh, okay.
So if we get a 5-minute closing, and I know this is on the 15-minute time frame, maybe on the 5-minute we did. So on the 5-minute, the close would have to be this current candle.
Oh, and the SAR came up too on the 5-minute.
Yeah. So, and you see, this is what I talked to you guys about. You see this red SAR? Now, if I was trading later on in the day, because my entry would have been this 4-hour, I would still not be in this US 30 sell. My US 30 sell, if it was me trading without you guys on the live session, I would have waited for a red, two candles to close below this red SAR that has just been formed. So we technically got an early entry. That's the best thing with this double SARs. Even on the lower time frames, you might get that early entry. Now, if you trade like me, like waiting for, on lower time frames, you don't extend your lines and you wait for those two candle closures, and you're only trading the immediate SAR that's in front of you. It's safer, but sometimes the move will be, ideally.
I think that's how I've been getting burned in. Honestly, I need to turn. Oh, can't you turn it? Change the settings so that no, you can't. I was gonna say if you could change the settings so the long lines don't show up on lower time frames, but you can't do that.
The longer lines don't show up on the small time frames.
Like if you could set the lines to be 500 on 4-hour and 1 hour, but on the other ones just 5.
Oh, I mean, you would have to have separate charts for that, right? Because for me on the 1 hour, yeah. Oh, I see what you mean. Yeah. But even if you're doing it like I do, like this way, waiting for this SAR right here, so long as your entry is based off of the 4-hour, or your entry, what is it? Your targeted area is based off of the 4-hour and 1 hour, you shouldn't be getting burned. What have you been trading, US 30 or gold?
Well, the reason I'm saying I'm getting burned because I don't turn off the 500 on the lower time frames.
Oh, yes, yeah.
So I don't get the live ones. I've probably been trading old ones, and that's what's been messing me up.
Yeah. Oh, yeah, that makes sense. Yeah. So just on the 5-minute, I recommend just
I'm gonna just start using 2 charts.
Yeah, or 2 charts. Yeah. All right. So there you go, guys. So this first one, where the hell did I enter my trade? Because you know what? I used 500 pips and no, I'm sorry, 50 pips and 100 pips for this trade. Oh, God. Okay. Did anybody enter this trade using, maybe I think that's why then I survived this trade. Did anybody enter this trade? What did you guys use for this one?
I entered on with 50 pips stop loss on both entries. I moved it down more, but
Oh, okay, perfect.
uh,
Okay, so let's say then, so, okay, this makes sense. So this is how okay, yeah, I did not 30, I did 50. Okay, so I might need to wait a little more for this, but this is what I want to see. This red SAR, this is what I want to see if I'm in this trade. So I am up, this is why I was looking at my entry and I'm like, why isn't my MT4 matching the trading view chart? So this trade is,
EU is behaving now too.
yeah. So is anybody still in this EU trade? We should still be moving down.
I entered today on the double saw in the 1 hour.
Perfect, perfect. So this is what we want to see. You see the power of this and just waiting for this entry. The key thing with this SAR is knowing your stop loss, right? Because it is so easy for you to get faked out and then you lose a trade and then the trade goes straight into TP. So that's the key thing. All right, perfect. So for me, I am still, how many pips am I in profit? I entered 35,048. So I'm like 20, I'm fluctuating between 20 and 30 pips. Yeah. All right, let me know if you guys have any other questions, but yeah, so for gold, so I don't mind not having a trade on gold. Honestly, I'm waiting for that buy to be formed, but it looks like we'll get that buy SAR on the daily, maybe Friday or maybe early next week, because you can see we don't even have that. At the very least, EU created that buy SAR, but you can see the importance of waiting for these closures above there. So gold hasn't created that, and I do expect gold to flush down below 1900. Okay, so far so good. So this one closed below. Yeah, because if I zoom in, yep, it closed below. So we need this next other. So if I was trading, right, my entry would be if this current 5-minute candle closed below that SAR zone itself there.
There's a SAR on the 4 hour that's it's about to close under 2. Well, when does the next 4 hour close in?
The next 4-hour closes at 1 p.m. So like
Oh, okay.
yeah. Let's see. Yeah, so EU, yeah, EU looks like it's behaving. So look at that, right? This was created 2 days ago. So this is the importance of just following this. I think if you ask me, the time you can get burnt using this SARs is over leveraging, or you catch. So let's assume EU comes back from here, right? Is if you catch the end of a move. So like, to be honest with you guys, I have 2 accounts, and these are my testing accounts that are in drawdown. But what I've decided, especially right now, since it's unlimited trading days, guess what I'll do? I'll just wait for gold to start buying. So to create a buy SAR on the daily, and then I'll just start buying. So hopefully by then I have that little EA we can just use for buys and buys only. But for those ones, I'm just saving those accounts until, because I'm waiting for that buy on gold. So it made, and I'm happy that it's not even showing up even at the very least right now, because which means gold can keep dropping. I think gold will go to like 1850 area, if you ask me, like around here, or 1880, 1890. So you can see we have some support to the left, 1890, 1850 area. So that's when I expect gold to go down there, and hopefully if it goes down there, we get a nice buy on gold. But like those 2 accounts I have in drawdown, those test accounts I use, I'm just gonna wait for gold to do a buy, and then I will just use that. So I'm hoping we get to like a 1:1 risk to reward for this trade. And then that should be it for the day. This one is just moving sideways. Let me know if you guys have any questions. If not, we'll just call it a day. If you're in this trade, right, set break even at a 1:1. This trade is a 0.5% risk. So if you win this trade, you'll be up 1%. So that's good. The filler trade taken in the beginning of the session ended up at break even. Also keep in mind, we have this other 15-minute entry, so you can still use that to enter. So personally, I am still bearish on US30. The only way I can take bullish entries on US30. So right here, if you see the 4-hour, I don't counter trend. I don't really like counter trending nowadays, but if I were to counter trend, I would need to see double SARs on the 4-hour, like double buy SARs on the 4-hour or double buy SARs on the 1-hour. And right now for US30, this is only the current buy SAR that's here on the 1-hour, and you can see it right here. So I don't really want to do that. I don't really want to trade that. So like in this region right here, you see 35,280. You can see on the 1-hour, we have double SARs, which is why I've highlighted it and, you know, put a rectangle over it, because that's where we have like a double SAR. But my advice to you guys is, if you're going to counter trend, you know, not to mean that US30 cannot go back, you know, cannot go up from here. So keep in mind, as much as I am bearish, or the SAR indicator tells us that we are bearish on US30 on the daily, it can do what it did here, right? Here we were bearish on the daily, but US30 went back up, but then came back down. So keep in mind, it can go up and pick up liquidity, like selling liquidity before coming back down. So which is to mean you can still catch the move up. But for you to catch the move up, I recommend using a double SAR. If you want to back test and use a single SAR, feel free. But what I would recommend is, if you're countering, what is it called? If you're countering the daily bias, like for example here, trades in the direction of the daily bias I've mentioned, I'm using a 0.5%, 0.5 to 1% risk. So if I am going to enter a buy in anything, whether it's US30, gold, and EU, like right now, if I had a valid buy, I would risk between 0.25 to 0.5. So that way, my risk for countering the trend is lower, because I know that the daily trend is bearish. So for example, if I took a buy, if I was to take a buy based off of this 1-hour zone right here, which means in the next 13 minutes, this second hourly candle needs to close above this SAR that was created and broken above. If I was to take that buy, I would take that buy with a 0.25% risk. But if I'm taking this sell right here, I'm in this sell with a 0.5% risk. So meaning, if I make money on this sell, I'm making 1%. If I make money on this buy, which is countering, I'm only making 0.5%. But on the other hand, if I lose money countering the trend, instead of blaming myself and saying, oh, I should have just stuck to the daily bias, I'll be like, okay, I only lost 0.25%. If I lose money trading the daily bias, I'll be like, okay, I lost 0.5%, but I was trading in the direction of bias, in the direction of the daily bias, and the probabilities were in my favor. So you'll just be like, that's just one of those days. So similar to like having a tight stop loss. Like for example, here, if I had a stop loss of 20 pips right here, I could have been like, oh, I just got faked out, and then the trade came back into profit. So right, it's all about learning, like thinking about what gives you more probability, like in past experiences. So if you've gotten picked out in past experiences by using a 20 pip stop loss, maybe stop using a 20, maybe use a 30, or just look for other entries. But the key will always be back testing and finding what one strategy works for you, because the way I trade is not the way other people trade. There are people out there who are scalping. So my strategy might not line up with theirs, but the idea here is that we all have the same strategies available to us here. So it's just finding what works for your particular strategy and just sticking to it. So the principle, whether you're scalping, swinging, intraday trading, the principles of the SAR, of the breakout scanner, of the reversal, all of these principles still remain the same. The question is how, is your risk management, is your stops and everything. Yeah, but if you guys don't have any other questions, we'll just call it a day, and we'll just observe that. So if you're in this trade with me, when your 1-to-1 has been achieved, go ahead and set break even or secure some, but at the very least, set break even. And US 30 is dropping heavy now. I will talk to you guys tomorrow. All right, bye guys.